Hey, good morning, good Monday morning. Welcome back to winter if you're in Chicago. Sleet and snow after the summer we had on Saturday. I think that's about it. Well, I'll tell you, last week in the real estate world and the mortgage world was a roller coaster. And again, not selling rates, but giving you an update on rates and what they're doing. We're going to talk a little bit about the refi demand. We're going to talk about the purchase market. We're going to talk about a dramatic change in second homes and investment properties from the rate side. So if you are looking for one of those, stay tuned. It's a cliffhanger, isn't it? But across the board, I would encourage everyone, if you were pre-approved in the last month, to go back to your lender and get pre-approved, because rates when you were pre-approved about 3 weeks ago were about, I don't know, let's say 2.875 to be conservative. Right now, that same rate's going to be about 3.25, 3.375 on a 30-year fix. That being said, or that meaning, if you were tight on your ratios, meaning what you spend and what you make, if that number cannot exceed a certain number, if you were close to that number and still pre-approved, that's wonderful. With the increase in rates in the last 2 to 3 weeks, it might change your buying power. It might not have you qualified for that loan anymore. You may need to rethink your purchase price. So if you're pre-approved, go back and get pre-approved. If you're not pre-approved, call me because those rates will make a difference. Talk about rates. Let's get into the second home. Cindy Gruchbacher in Texas. Heard you guys had tornadoes yesterday. Let's go back, and if you're in the second home market or you're in the multi-unit investment property market, Fannie Mae and Freddie Mac, what's the best way to put this? Well, late Wednesday, Fannie and Freddie decided they aren't comfortable with their growing portfolio of second homes and non-owner occupied properties. So what they did, with little to no advance notice, is they skyrocketed those rates on second homes and non-owner occupied investment. I'll give you an example. I was looking at one for a gentleman on Wednesday on a second home. And David Kozar, how are you, my friend? Excellent realtor, first responder, frontline worker. You're the best. So those second homes, I get distracted so easily. Those second homes and non-owner occupied. Wednesday afternoon, I was pricing a investment property for a gentleman. 4-unit, non-owner occupied, the rate was about 4.25. So investment properties are always higher than primary residences. Thursday, that same property, multi-unit, 4-unit, non-owner occupied. Laura Martin Marquardt, good morning. You're finally here. You didn't miss it. Coldwell Banker. That same property was 5.25. Again, 4-unit, non-owner occupied investment property increased by a full % from Wednesday to Thursday. That is taking effect April 1st. So if you're out there looking, again, if you're pre-approved, your rate went up by a full % on non-owner occupied investment properties. Second homes, this is crazy. Second homes normally 10% down, rates right around the same as a primary residence, similar underwriting guidelines. Julianne Monaco, how are you, my friend? Haven't talked to you in forever. So second home, I was pricing one for a gentleman. Again, it was Wednesday, or maybe it was a lady, not to offend Ms. Kovar if she's watching. And it was 3.375 on a second home, not investment property, second home, single family residence. Thursday, thanks to Fannie and Freddie increasing their rate because their appetite isn't so keen anymore, that same property was 4.125 to 4.25. Second home, not investment property. Again, it came out of nowhere. It's taking effect as of deliverables April 1st. So if you're in the market for investment property, Melissa Lively, always a fan. How are you, my dear? April Properties. So if you're out there, if you have buyers looking for investment property, again, it went up, give or take, about a full %. If you're looking for second homes, that one was 3.375 to 4.125 to 4.25. Again, about a full %. So you realtors out there, if you have people looking, make sure they get their numbers rerun, because a full % is going to make a big payment difference, and it's also going to make a big difference in their ratio. So if they're close, that's the story. Why are rates going up, somebody asked me. Because my old boss used to say, what goes up must come down, or what goes down must come up. I really don't know. But rates went up because, as I always say, bad news in the market is good news for mortgage folks. We're like the Grim Reaper. of bad news. But there was very good news last week. 379,000 new jobs were generated in February. That was a lot more than those analysts estimated. So they sit around and they estimate. When the number is greater, rates go up. When the number is lower, the possibility of rates are going down. Jobless claims were the lowest numbers, I think, since about 2020, which is only a year ago, since November 2020. So that was, 3-4 months ago. There might be a little hope with rates coming back a bit. The 10-year bond, I know this is very, very educational today. The 10-year bond is approaching back to about 1.50, which is a little relief in rates. But if you think about it, 3.375 to 3.25 on a primary residence is a hell of a rate. It's a good rate. You need to be pre-approved. We need to run your numbers. Vaccinations are rising, and restrictions are getting a little looser. That's also good for the market, which is bad for mortgage rates. There's a lot of stuff going on, man. There's just crazy, crazy stuff. First-time home buyers, this spring market has not started. The spring market is probably going to be the most robust, that's right, I said robust, that we've seen in a while. The thing that's going to pull that back is there's not a lot of inventory on the market. So if you want to be robust, if you want to be a first-time home buyer, they say first-time home buyers are going to run the spring market. A lot of people call up and ask about first-time home buyer programs. There are a lot of first-time home buyer programs out there. What you want to be aware of, you realtors and you people shopping for homes, if you're a first-time home buyer, a lot of those are income-based. They're income-based by county. So people will come in and say, hey, I'm a first-time home buyer. I want all this grant. Well, guess what? Lisa Keating, Century 21, good morning. If you're over an income limit, it ain't going to fly. It's just their income base. So sometimes first-time homebuyer programs are great. Sometimes they open the door for first-time home buyers to learn more about conventional loans, which can be 3% down on some loans, 3.5 FHA, 0 VA. A lot of programs out there. So again, if you're a first-time home buyer, don't think lenders will be throwing money at you depending on your income. It's all income-based. But you know what it takes? It takes a quick phone call to figure it out. That's what you need to do. Spring market, again, is going to be huge. Not a lot of inventory. Jack Honer, hey Jack, Colorado, stuck in the snowstorm. So, there's things happening. The market is going to move. Again, I always advocate getting pre-approved. It solves a lot of issues. The hot topic, again, I'm going to review it one more time, Fannie and Freddie, because they're not comfortable with their growing portfolio of second homes and non-owner occupied, have increased those rates dramatically. If you're looking in that market, get pre-approved. Realtors, if you have people in your car or in their own car or in your trunk that are out looking at investment properties, out looking at second homes, rates took a dramatic jump last Wednesday, unannounced. Deliverable date is April 1st, which is soon, and it's not an April Fool's joke. Market is good. Rates are good. I hope you're good. I'm good. Very bright in here today. Is it a halo? Hey, have a great week. You know where to find me. Apparently I'm on Instagram, which I find very exciting. So follow me. Call me. Let's do something. Have a great week.